I have to admit, when I first saw this thing, I was like, "Holy, you know what?" And when I show it to you, you're gonna think the same thing. And if you're a watcher of my channel here, we talk about the stock market and options trading and taking advantage of opportunities that come along. Now, with this thing I'm about to show you, there has to be an opportunity because things like this don't come around that often. So get ready to see this thing because you're going to be like, holy, you know what? All right, so let's just jump right in and take a look. Hey everyone, Lee Lowell here from smartoptionseller.com. Look at this chart. If you're a watcher of this video, we talk about the stock market and I've shown you some charts before, but look at the chart of this thing. Since I don't have it written on here, you probably don't know what this chart is for, but I'm going to show you. But before I do, just look at this thing, how it's traded sideways. And this is going back to 1996 or so. So it's in this range for a while. And then just look at this massive takeoff. What would be the reason for this? Why would it go up so much? And there has to be some kind of opportunity because this thing's going to come back down at some point. So what is it and why is it going up so much? And how do we take advantage of it? Well, for those of you who are chocolate lovers out there, you may have been wondering, why has the price of chocolate been going up so much, recently or the last 6 months? And, if you look at I did a quick Google search on why have chocolate prices gone up? And here's some of the results I've gotten. Rising cocoa prices make chocolate more expensive. Chocolate prices increase due to global cocoa shortages. When did chocolate bars become so expensive? And right here, cocoa prices at 47-year high before Valentine's Day. Now, if you look at this chart, I'm going to pull up this article from NPR. Cocoa prices spiked to an all-time high right before Valentine's Day. Well, if you are a chocolate lover, chocolate fan, you know that the main ingredient in chocolate is cocoa. So obviously, there's something going on with cocoa. And if we go back to the chart here, bingo, this is a chart of cocoa futures. So there's obviously a reason why chocolate prices have gone up, and it's because cocoa prices have skyrocketed. Why is that? Well, the main grower, the main exporter of cocoa comes from Africa. So they're obviously having some problems with the supply, the cocoa beans, shortage, whatever. If you know how supply and demand works, if the supply of something has gone down dramatically, that means the price of that item is going to go up tremendously. So obviously, the supply of cocoa has decreased, meaning the price of cocoa has gone up. And I know, being a longtime commodity trader, commodities trade on supply and demand fundamentals, the growing seasons, how the crop is doing, whether there's too much rain or if there's a drought. These are all things that affect the prices of commodities. Same thing that's happening with cocoa right now. There's a shortage for whatever reason, and the price of cocoa has been going up. And all the end products that use cocoa have probably gone up in price as well. If you follow the orange juice market, Florida is the main grower of oranges. Hurricanes have been hitting the state of Florida the last couple of years. So the price of orange juice has gone up, and the price of orange commodities has gone up as well, just like this chart of cocoa futures. So how do we take advantage of this? What can we do to potentially play the future pullback in the price of cocoa futures? Now, my chart only goes back to 1996, but let me show you a longer term chart here of cocoa futures. So this chart goes back to, and this is from barchart.com. You can go to barchart.com and get these free prices. Now, this chart goes back to into the 1970s. So you can see for a long period of time, cocoa was stayed at this range, and then all of a sudden we get the spike right here. For those of you who don't know how the commodity markets trade, they trade in futures contracts, not stock prices, but futures contracts. And there's different months that these futures contracts trade for. Now, right now, cocoa futures, the May 2024 is what's called the front month futures contract. And right now, it's up to $89.39. That's $8,939 per metric ton. It was trading close to, $3,000 just recently, and it's ran up almost to $9,000. That's a $6,000 bump up in the price of cocoa futures. And each point, 3,000, you can consider it 3,000 points or 3,000 ticks, is worth $10 per point or $10 per tick. So this $6,000 jump is a $60,000 actual dollar move. If you had one cocoa futures contract and you rode this move all the way up, you would have made $60,000. If you had 10 contracts, that'd be $600,000. So there has to be some kind of opportunity here to play the pullback in cocoa futures. Now, this is the May contract. May 2024 is all the way up here. But we're going to be looking at a contract, or at least I'm going to be looking at a contract in 1 year out in time to the March 2025 cocoa futures contract. Now, that was a monthly chart. This is the daily chart of the May contract. Let's look at the March 2025 futures contract for cocoa. Now, you can see right here, the March 2025 futures contract is at 57.67, where the May 2024 contract I just showed you was up near that 9,000 level. So futures contracts all trade at different prices. It's not like a stock where there's only one price. Futures contracts have different expiration months, and they all have different prices attached to them. Okay, so if we go back to this bar chart here, we can look at the prices, and I'm going to show you some option prices. How are we going to take advantage of this? Now, I just want to show you, these are the futures contracts you can look at. May 2024 is what's called the front month futures contract, and these are all the next futures contracts for cocoa, going all the way out to December 2025. You can see they're what's called serial expirations. They expire in only certain months of the year, every 2 or 3 months out. Now, this is the this is the March 2025 contract, and this is we're going to show you the front month. And again, this is close to $9,000. So we want to be able to play a pullback. I tried to do this about a year and a half ago with the wheat futures when Russia invaded Ukraine, and I'll pull up the price of wheat futures here. Let me get that going here. Okay, so here's the price of wheat futures. Let's go out to the monthly chart. Move myself over here. Wheat futures. Now, I may have made a video about this. I can't remember, but here's when the wheat futures started to rally when Russia invaded Ukraine, because Russia is a big Russia and or Ukraine's big exporter of wheat, and so if a war can disrupt supplies of a commodity, so wheat futures spiked, and I thought this was going to be a very short-term event, and wheat futures would come back down, which they eventually did, but my expiration date for the options contracts that I purchased was only 3 months into the future. So I didn't give myself enough time. So if I'm going to play this potential pullback in cocoa futures prices, I'm going to give myself more time. I'm going a year out in time. All right. So once again, let's pull up the cocoa futures. And you can see, look at this thing. There has to be a pullback in this thing at some point in time. And I'm willing to give myself a year out in time to potentially, capitalize on this. So I want to show you this opportunity here, the things that I'm thinking about. So how do you play a potential pullback in, a futures contract, futures, commodities like this? Well, you got to take a bearish trade. And to me, the least risky way to play that is by buying single put options or put option debit spreads. You can even sell call option credit spreads. Don't sell anything naked. Don't sell futures contracts naked. Don't sell naked call options. Don't do that. What I'm going to look to do is just to buy put options or put option debit spreads, and that'll take advantage of a pullback here. what we have to do is, number one, we have to look at the futures contract for the month that I'm looking for, and right now that is the March 2025 contract, and we'll go out to the daily chart. So right now it's trading at 57.67, all-time highs for that contract. I'm looking for it to pull back to potentially, where it had came from. It was trading flat and then it just ramped up. So I'm probably looking between the 3,000, the 30, this is 3750 up to 4,000, somewhere in this range, 3,800 to 4,000. I'm going to look for a pullback in the next year. So I'm going to be looking to buy some put options or put option debit spreads. How do you do that? Well, we have to look at the option contracts and see how much those things are trading for. Now, here's again, at barchart.com, cocoa March 2025, trading at 57.67. And the thing about futures options, they expire in the month prior to what is listed here. So these March 2025 options will expire on February 7th, 2025. That's a little quirk of commodity options. They expire in the month prior to the listed contract here. All right. So by February 7th, 2025, I'm hoping to see the price of this March 2025 futures contract pull back to maybe the $4,000 area. And so I have to decide which put options I want to buy. Now, these are the prices as of March 22nd, 2024 for this March 2025 futures options. Now, if we go to if we think it's going to pull back to maybe 3,800 or so, we can look at the 3,800 puts right here, closed at 80 points. And you have to multiply whatever you see here by 10 because the multiplier is $10. So this contract, if I bought one of these things, it would cost $800. If I bought 10 of them, it would cost $8,000. Now, these are out of the money. These 3,800 puts are out of the money. The current futures contract is around 5,800. These are, 2,000 points out of the money, and it would cost $800 to buy one contract. If you go up to the 4,000 puts, they'll cost you about $1,090. So we have to decide, or I have to decide, and this is not a recommendation. This is not a live recommendation from me. This is just something that I'm showing you what I'm going to be doing to try to take advantage of this opportunity. Now, if you wanted to go to an at the money, which is the option strike that coincides with the closest to the current price of the futures contract, it's like if IBM stock's at 100 and you wanted to buy an at the money option, you would look at the 100 strike. Well, the same thing with futures. The futures contract's near 57.50, and that 57.50 put would cost about $7,670. So $7,600 to buy just one contract. That's pretty expensive, okay? And there's no guarantee that the cocoa prices are going to come back down. That's one of the hard things about trading options, is that you're trying to make a prediction of where the price will be at a certain point in time. I'm giving myself more time in this particular trade versus the wheat trade that I failed on. I'm going to give myself at this point till February of 2025. Maybe I should go a little longer, but I'm hoping that the cocoa prices will come back down in that point in time. So I'm going to probably look closer, as I said, into that maybe $3,800 to $4,000 range. So the 3,800 puts are worth $800 that would cost, and the 4,000 puts would cost $1,090. How much money can I make on that? If I was to buy the 4,000 puts for $1,090, let's go back to here's the March 2025 cocoa futures, which is at 57.67. So if it came all the way back down to $4,000, the money that I could make, it will all depend on what time frame the cocoa futures comes back down. If it takes them the whole year till next February to come all the way down to 4,000, I won't make any money because my option will expire at that point. But if in the next 6 months it comes down to 4,000, I could potentially make thousands of dollars off this thing, because the option value, the put option value, which will still have, almost 6 months of life left to it, it's going to skyrocket in value Don't know how much because it all will depend on how far cocoa futures comes back down. But there has to be some kind of opportunity here. Seeing a chart like this is just insane. Let me pull up that monthly again. All right. So this is just insane. There has to be some kind of opportunity here. So this is how we do it, or this is how I'm going to do it. I'm going to buy some puts or put option spreads for a pullback. Now, if you wanted to buy a put spread, let's take a look at those prices. If you wanted to buy an at the money put spread, let's say, we can buy let's say we bought a 57.50 put and sold a, let's go, how many points do we want to go? Let's say we wanted to do a 500 point spread here. So if we bought the 57.50s and sold the 52.50s, so that's a 500 point move. So that's a $5,000 spread in between, dollar wise. And let's see, if we bought this one for $767, you have to pay for that. And then you sold this one for $498. So that's $269. So almost $2,700 to potentially make $5,000. So you can almost double your money. So put spreads have a limited risk and a limited reward. So you can do it that way. That way the market doesn't have to fall that far. All cocoa futures have to fall down to 52.50 and you'll make the maximum on that. You know, for me, if I'm going to buy the 4,000 puts, which are down here, then the cocoa market has to fall a lot further in order for me to make a lot of money. But my opportunity will be unlimited because if cocoa prices keep falling, the value of this 4,000 puts going to keep going up. If you buy the spread, there's a maximum amount that you can make. So it's not an unlimited gain. So you have to decide, or I'm going to decide, do I want an unlimited gain potential or do I want a limited gain potential, whereas the futures don't have to fall that far? So there is an opportunity here somewhere. For me, it's real speculative. This is, as I said, this is not a real trade recommendation. This is just something I'm looking at. I want to alert everyone to the opportunities that may exist here. Trying to figure out when these cocoa futures will go down is, who knows? I mean, they could keep going up for all I know. The supply of cocoa beans could stay under pressure for a longer period of time, and the prices could keep going up, which means my put options will expire worthless and I'll lose my investment. That's the risk that you take. As I said, there's no guarantee the prices will come back down. They could keep going up for, the next 6 months. Who knows? But I know with charts like this, eventually gravity takes over, supplies come back up into more plentiful numbers, and the prices come back down. This is just one of the most ridiculous charts I've seen. And that's why I said, holy, you know what? So I'm here to try to take advantage of that, make a trade to take advantage of the opportunity. And I wanted to show everyone the same thing. The last thing I want to mention is people will probably say, well, how do I get involved with this? How do I actually make these trades? In order to trade futures options, which is what we're going to do here, or what I'm going to do here, commodity futures options, or you can call them commodity options or futures options, same thing. You have to have a trading account that allows you to trade commodity options or futures options. A lot of mainstream brokers today, Charles Schwab, Interactive Brokers, can allow you to trade commodity options along with your regular stocks and stock options. They can all be done in the same account. So if you're not set up for commodity options trading yet or futures options trading yet, just talk to your broker, ask them how you can get involved with trading commodity options. You may have to fill out a separate form, or they may just let you do it. So that's how you get involved with commodity options. Remember, they're not stock options, they're commodity options, and that's what you're going to be doing here. All right, so I hope this has been helpful for you. I know this is different than what we usually talk about. We usually talk about selling put options on stocks and selling put option credit spreads. That's what we do at the Smart Option Seller. If you watch my channel for a while, you know that's what we talk about. So this is a little departure from that normal routine. So I hope this is giving you a little bit of an idea of what else is out there. I'm a long-term commodity trader, so I still follow commodities markets. I look at these things from time to time. And when I saw this, I was like, oh my God, I have to try to take advantage of this. So I hope this has been helpful to you. Leave me a comment, give me a thumbs up, send me an email. I'll always answer your emails. All right, everyone. Everyone has a great weekend, and I'll see you next time. This is Lee Lowell signing off.